This is Bruce for Hola Prime, taking a look at the New Zealand dollar, Nasdaq, S&P, and gold. So starting with the New Zealand dollar, I just wanted to point out this rising parallel trend channel that for a third time has hit the bottom of the channel, therefore opening the door to a possibility of an eventual rally towards the top of the channel, at least maybe towards the center of the channel. Now, I don't see any particular setup relative to what I look for right now, but I think it deserves to be watched, especially if there is a pullback down to this previous breakout on a 4-hour chart of 56.86, maybe even down here 56.77. Anyway, I think that deserves to be watched because if it breaks down below this line, we know things are not working out as anticipated. Moving on to the Nasdaq 100. And I want to look at something relative to the S&P on this as well. You can see, so I've got based on the confluence here of the 61.8% at 19,722 and the purple 20 moving average at 19,743, along with this line at the bottom of this bearish flag. It looks like this is the better chance resistance zone before this rally may be done. That doesn't mean that it goes right to it. But that's what it looks like right now because this is a significant potential line, the 20 moving average. Now, look at the relative distance between where it is now and where the 20 is compared to the S&P, and you can see the S&P is almost at testing resistance at the 20. So I think this deserves to be watched, a relative relationship, because S&P is probably going to test resistance at the 21st, and that could tell us something about what might happen next, particularly if it breaks through it for a bit, or if it continues to push up against it, and so forth. And then if it breaks out through it, then we're looking at the 200 as the next target zone at currently at 5,762. And on the NASDAQ, the 200 is up around 20,300, 316 or so. So quite a bit higher. And then finally, we have gold, which just completed a 261.8% extended target for this retracement, the retracement of this decline, and also hitting this top channel line approximately. And we have this potentially bearish shooting star candlestick pattern. A drop below today's low of 3,101 is a short-term bearish sign that could lead to a deeper pullback. Potentially testing this previous high becomes possible resistance at 3,057.58 or so. Also keep an eye on this internal trend line, but it also wouldn't be surprising to see a test of the 20 moving average. You can see since this most recent reclaim, after a brief time below the line, there's been no retrace back to that 20. So I think that's also possible too. But there's a lot more that has to happen before that happens. And that changes if there's a rally above today's high of 3,149. Just have to make sure that it sustains itself. And you can see today's rally to a new high did not sustain itself. All right, that is it for today. Have a great week.